Wall Street indices close higher ahead of the Fed policy decision as fears ebb over the ongoing banking turmoil. The street is largely expecting the Fed to stick to its tightening cycle and raise rates by 25 basis points as it tries to walk the tightrope between soothing financial markets and fighting inflation. Stocks in the Asia-Pacific opened with a gap up as global equities rally. The SGX Nifty 2 is indicating a positive start for the Indian market. Oil prices edge up after climbing off the 15-month lows earlier this week. Brent bounces back to $75 a barrel as fears of a banking crisis impacting demand ebb. The government is in a race against time to meet its divestment target of 50,000 crore rupees with barely 10 days left. The government is still short by 19,000 crore rupees, and the government department in charge of divestment indicates it is in favor of including dividend receipts as part of its revenues. That's an exclusive. A 6.6 magnitude earthquake hits Pakistan and Afghanistan overnight, with even parts of North India, including Delhi, feeling strong tremors. At least 9 people lose their lives in Pakistan, while no casualties have been reported yet from Afghanistan and India. Good morning in the Mumbai News Center. I'm Sonam Bhutra. You're watching Power Breakfast. Those are the top headlines that we are tracking this Wednesday morning. But as always, let's take a look at what the Asian markets are doing, because it is a cheerful looking screen as far as the global markets are concerned, especially for Asia. Look at the way Hang Seng has moved. It is leading the gains in the Asian markets, up 2.1%. Even Taiwanese index is high by 1.3%, and that's the case across all the indices actually. Nikkei 2 is high by 1.9%. You have something like a Kospi, which is surging 1%. This is ahead of the crucial FOMC outcome that is expected today from the US markets. So that is something that the entire street is watching out for. And ahead of that, they're continuing the gains that we saw in yesterday's trading session as well. SGX Nifty, as a result of which, is indicating that the start could be in the green to flat. Actually, it has come up from the highs. It's 10 points higher today. So let's see which way things go. But for now, yes, the global markets again are indicating that it could be a green-looking screen for the Indian markets as well. Let's talk about the U.S. markets now. Ahead of the U.S. Federal Reserve's policy decision, Wall Street ended Tuesday's trading session higher, with the Dow Jones and S&P 500 gaining about 1% each, and the Nasdaq Composite closing over 1.5% higher. Stocks gained for a second straight session after U.S. Treasury Secretary Janet Yellen said that in order to contain the banking crisis, the government is ready to support small banks' depositors if necessary. Listen in.
The steps we took were not focused on aiding specific banks or classes of banks. Our intervention was necessary to protect the broader U.S. banking system. And similar actions could be warranted if smaller institutions suffered deposit runs that posed the risk of contagion.
Okay, with that, let's move on to the closely tracked U.S. Fed meeting that is underway. The Fed's policy decision is expected tonight, and its commentary in the wake of contagion fears will be closely watched. 52% respondents to a CNBC Fed survey say that the Fed should hike rates at this meeting. CNBC's Steve Leisman gets us all the highlights of the survey.
This is an unusual meeting in extraordinary times, and it gives us a sort of unusual survey with a lot of uncertainty and disagreement about what will the Fed do and what should the Fed do. Take a look at our Fed expectations chart. 72% say there's going to be a hike, which is pretty much in line with how the market is priced. Interesting, because our survey was from the end of last week. But only 52% say the Fed should hike. So some percentage think the Fed ought to hold its powder right here. And the peak rate remains pretty high, actually higher than it was at 5.20 for June. But then 86% say the Fed either cuts or pauses at the next meeting in July. So, okay, here's the thing. We asked, what's the more important driver of Fed policy? Protecting financial stability and the health of the banking system, or reducing inflation? 52% say it's financial stability rather than inflation. Here's some of the commentary we got. Joe Lavorgna from SMBC Nikko Securities writes, continued hawkishness from the Federal Reserve would justify a further marking down of our forecast for growth and recession severity. And then we have Mark Vittner of Piedmont Crescent Capital. He says The Fed's earlier missteps on inflation and its abrupt correction this past year laid the foundation for the crisis we face today. The Fed should not compound its earlier mistake by giving in too early in the inflation fight. What about the outlook for recession? 55%. It's up from the prior survey, 51. 57% say it's going to be a mild recession. And then interestingly, September 2023 is the average start date. That's a quarter later than the last survey. That's because we've had this strong growth in the first quarter, and the average length of the recession seems being 8 months.
Okay, that is the CNBC Fed survey, and of course you can catch that action on CNBC TV18 about all the decisions taken by the Fed as well. With that, let's also listen into some important opinion coming in from former Richmond Fed President Jeffrey Lacker and RBC Capital Markets Tom Porcel.
I think they should go ahead with a 25 basis point increase. I think they have still more work to do to fight inflation. And I think to pause now would send a signal of concern and worry and convey that they know that things are worse than people on the outside think. But I take Jay Powell seriously last December, and I think he was right then that what happens at this meeting or any given meeting is less important than the destination of this journey.
I think the Fed will raise rates 25 basis points tomorrow. I do not believe that they should raise rates 25 basis points tomorrow. But, you know, again, our view has that's been our view. I mean, right. I think the Fed was fighting yesterday's war on inflation. So we never really believed in the idea of having to get this aggressive, particularly toward the end of this hiking cycle. But it's pretty clear now with the market priced, as you said, about 75% chance of the Fed going tomorrow that the Fed is going to deliver. I think if they don't deliver, particularly on the back of market pricing in, virtually a 25 basis point hike for tomorrow, I think it would just lend itself to confusion, worry. What do they know that we don't? So I think at this point, it looks like they're going to go.
Okay, with that, let's move on to the final update in our global market wrap this morning. European markets also ended Tuesday's trading session higher, with the French CAC up about 100 points, while the German DAX and the British FTSE surged over 1.5%. 2 days after a deal to rescue Credit Suisse was announced, the stock closed 7% higher, while UBS ended 12% higher as banks extended gains. And with that, we'll slip into a break. Up next, we'll tell you how these global cues could impact our own markets. Welcome back. You're watching Power Breakfast here on CNBC TV18. As promised, we now get our research team to tell us what the trade setup looks like, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. First up, Rima, let me come across to you. What is the market setup looking like today?
Well, there is green on the global screen, and that's going to help things. To begin with, U.S. markets ended with gains of 1 to 1.5%, and there is some buoyancy seen in the Asian market. But for our own markets, yesterday we saw a gain of close to about 0.7% on the benchmark indices. The Nifty has climbed above levels of 17,100. That's where we're currently positioned. But a lot of technical analysts are saying that for the markets to have a convincing up move, to see greater upward momentum and breakout, the Nifty needs to climb the resistance or the hurdle level of 17,200. That remains key, and let's see whether we can do that in today's trade. On the downside, Monday's low of 16,828 remains the key support level, but we're quite a distance away from that. In terms of flows yesterday, the DIIs bought 1,946 crore in the cash market. The FI sold 1,454 crore in the cash market. So DIIs bought, the FI sold, but the flows were impacted on account of that Devyani international block deal of nearly about 3%. Well, it's going to be a lot about the global markets, and it's a top-down approach in that sense. There are two important meetings to track. One, of course, is the Fed meeting. Will they pause, pivot, or hike? And the other one is the U.S. bank CEOs are also meeting, led by JP Morgan, to try and discuss First Republic future. So that's going to be top of mind as well. The dollar index has eased to levels of about 103. The 10-year bond yield has risen to 3.6% as market participants today are pricing in about an 89% probability of a 25 basis points rate hike in the Fed decision. So there is a possibility of an upside momentum. The SGX Nifty is suggesting a positive start, but let's see whether we can conquer 17,200 and build on it. Back to you.
Oh yes, that will be an important level, right? Thank you, Rima, for all those cues. Let me go across to Abhishek. He'll list out all the stocks that are in focus today.
Well, to begin with Tata Power, they have received letter of award for this by their subsidiary for 200 megawatt solar PV project in Solapur, Maharashtra. IOC, they have received approval for pre-project activities for setting up a complex in Odisha, which is estimated cost of 61,000 crore above. RVNL, they are holding a board meeting on 24th March to consider interim dividend. Tata Motors, they have announced a price increase of up to 5% for commercial vehicles ahead of BS6 phase 2 emission norms. So this will be effective 1st of April. HG Infra, they have been declared as a bid winner by North Central Railway for a project of about 655 crores, which has to be completed in 36 months. Hindustan Zinc, they have given a board approval of fourth interim dividend of rupees 26 per share. And on the other hand, Bandhan Bank has got board approval to pare down its stress in the balance sheet. So they will be selling off return of NPS as well as NPS to ARC. Over there they are receiving 369 crore for return of portfolio and about 370 crore for NPA on security receipts. This is a better rate than what many peers have got for the stress sale that they had done earlier. Back to you.
Okay, all right. Those are all the stocks in focus today. Finally, let me go across to Nigel joining in with all the cues from the F&O space. Hey, Nigel.
Well, morning, Sonal. Yesterday we had a good rally, and in fact, there was a bout of short covering actually that did take place on the markets on the whole, because the Nifty ended high, the Nifty Bank ended higher. But on the Nifty Bank, in fact, you had some open interest that was lower. Telling you that clearly, at least on the Nifty Bank, there was a bit of a short covering bounce that played out. What did the FIs do in the F&O market? Well, not too much on index futures, more or less status quo out there. And now their short positioning is at around 91.5% odd. As we have been saying, this is the highest that we've ever seen actually in terms of short positioning, both in percentage terms and in absolute terms. On the option side, though, things are quite encouraging, because they bought calls big time. They bought close to around 3 calls for every 1 put. But for me, the biggest positive is they're trying to create a bit of a base in the near term. And that's why they wrote puts. They wrote more than 80,000 puts in yesterday's trading session. What were they writing? 2 strikes, 17,000 put, 17,100 put. That's on the Nifty. Between them, they added close to around 70 lakh shares. So clearly, there is an attempt to keep that base at around the 16,950 odd. While on the Nifty Bank, that was more encouraging, because normally we don't see very, very active strikes out there. Yesterday, there was the 39,500 put that added open interest big time, and also the premiums at around 113 odd, which brings us to the levels. The bulls will want the Nifty to move towards the 20 DMA, both on the Nifty and the Nifty Bank. But in the near term, the support zone comes up for you on the screen. On the Nifty, you could see a correction of close to 100% in both the Nifty and the Nifty Bank, and you'll still be betting on some bit of a relief rally moving out from here. So that's where the support comes on the Nifty as well as the Nifty Bank. The SGX Nifty, the last time I suggested, was indicating a more or less flattish start. If you get 25 basis points, well, that's factored in. If there is no rate hike, or in fact there's a 50 basis point rate hike, then we'll have to watch out for a reaction out there. But otherwise, 25 basis points appears to be a done deal. Back to you.
Okay, all right, Nigel, Abhishek and Rima, thank you so much for joining us and prepping us up for this trading day ahead. With that, we'll move on to some other updates now. With only 9 days to go for the end of FY23, the government is falling short of its divestment target for this financial year by about 19,000 crore rupees, with market volatility and issues around the divestment of Hindustan Zinc being key hurdles to achieving the target. The Department of Investment and Public Asset Management is now batting for the inclusion of dividends from CPSEs into the overall divestment receipt pool, as it has receipts of over 52,000 crore rupees, exceeding the target of 43,000 crores in dividends set at the beginning of the year. The DIPAM has so far mopped up 83,000 crore rupees in receipts from divestments and dividends, as opposed to the total collection target of 93,000 crore rupees. Welcome back. You're watching Power Breakfast on CNBC-TV18, where we've spoken about the global markets, the impact on Indian markets, and a lot more. It's time to talk commodities now. Manisha Gupta is joining us with all the update. Manisha, the Fed outcome is something that the commodity markets are watching out for as well.
Oh, well, absolutely. And ahead of that, you could be expecting a choppy next 24 hours. But you know what? The investors have turned back to the riskier assets. We've seen some buying come back in equities, and that's exactly what we are seeing for industrial commodities. So the crude oil prices are off its 15-month lows. We've actually seen 1.5% of gain in the overnight market. The immediate worries about the banking turmoil have eased after the U.S. Fed has offered daily currency swaps to other central banks like Bank of Canada, Bank of England, Bank of Japan, European Central Bank, etc. etc. So the investors, as you said, have shifted focus now from banking crisis to the Fed action. And in the meanwhile, we've seen some relief rally come in for many of these commodities. Not just crude oil prices, but the industrial metals also have seen a rebound. So whether it's copper, which gained nearly 2% overnight, or the aluminum prices, which also have gained because the Chinese imports for the first 2 months of this year have jumped up by 11%. So we are looking at some amount of positive data coming in from China, and that clearly seems to be supporting industrial metals. The only thing that's seen a bit of a knockoff after that huge run-up has been the gold prices. That slipped 2% overnight.
Okay, all right. Thank you, Manisha, for joining us with all those important commodity cues. So those will be in focus as well. With that, let's move on to a somber news. Many people have lost their lives and over 100 are injured as an earthquake of 6.6 magnitude struck Afghanistan and Pakistan overnight. Tremors, in fact, were felt in parts of North India, including the national capital, Delhi, last night. Reports suggest more than 100 people were brought to hospitals in the Swat Valley region of Pakistan, and the earthquake also triggered landslides in some mountainous regions, disrupting traffic and daily routine as well. Okay, with that, let's move on and quickly take a look at what the Asian markets are doing, largely higher. Hang Seng, of course, is leading the gains that we are seeing in the Asian markets. Nikkei 2 is high by 1.8%, and the SGX Nifty is indicating that the start for our own markets could be in the green today. So stay tuned for that. That's all we have on Power Breakfast. Bazaar Morning Call comes up next.